Hey Money Monday audience, thank you for joining us today for our insurance segment. It's perfect timing that our guest today is coming on the show to talk about property and auto insurance as we have just ended our real estate series. Today, we have a franchise owner of American Family Insurance. She has been in the industry for more than 22 years, having serviced more than 4,500 clients. She's an educator first. Please help me welcome to the segment, Vanessa Dukes. Ms. Dukes, you've serviced more than 4,500 clients in 22 years. That's commendable.
God is good.
It truly is. Can you tell us a little bit about your story?
Well, I will say that I was in corporate America for a while, and my husband and I, we started an insurance agency under American Family Insurance. So what happened is, he asked me to come from corporate America to work with the business full time. So I decided to come on and join him. We started together in '97. So we have a passion for helping people. And with that passion, it led us to becoming a part of people's lives. And insurance is a protection measure.
Yeah.
It's a measure of safety. And so with that, I took a little bit more interest in educating the people. I don't look at myself as a salesperson. I look at myself as an educator. Ways to help people, ways to look out for people, and look out for their best interests in their families. So that's what we kind of started out doing. And of course, it leads to sales and things like that, but that's not my goal, my first goal. My first goal is to be a help and a blessing to people and families.
Awesome. So I'm glad you're here with our Money Monday audience, because today I'm sure there are people who are ready and willing to be educated in insurance. It's funny because I was sitting here moments ago and I was thinking like, man, if I could actually come up with an example of where insurance is in the Bible, for those of who are our audience, who are believers, who are maybe thinking, is insurance biblical? And just about the only thing I could probably think of that kind of resembled insurance, and maybe you could actually help me with this, I thought about when God originally created the earth, that Adam was supposed to represent the first Adam, right? So he was what God created man to be. And so when Adam fell ultimately, then Christ came and redeemed us in a form of a redemptive, right? And so I'm like, that redemption kind of reminded me of how insurance is, whether it be in a home and maybe there's a fire or maybe you lose a home, and then there is a repayment process, or maybe there's a rebuilding that happens. Would you say that that's like insurance?
I would say it's very much like insurance, because insurance is set up to indemnify you. And when indemnification comes, whereas we want to get you back to the place where you were. So in other words, if you buy a house, if you have a fire, you have a loss, we want to restore that house and rebuild that house. And so I'm going to explain further along about the proper insurance for people, because a lot of times we figure if we buy the house for this much, we should insure it for that much. Not so. And I'll explain further about that.
It's ultimately,
but it is a indemnification. It's like a buyback plan.
Got it. And it's helping to mitigate risks, would you say?
Exactly.
Okay, so if anything goes wrong, then guess what? We'll restore you 100%.
Restore you, yes.
So you talked about a bit about homeowners insurance. How do you know if you have a sufficient amount, or what's the right amount to purchase?
Well, it's the insurance agent's job to look at your package, to assess your needs. I had a client quite a few clients where they'll purchase a house for a really good price, to get a really good deal on the price. But think about it. Are you able to rebuild that same house for the price you just bought it for?
Yeah.
You may be getting a deal for it. I wrote a home in Wisconsin, and the values there are much lower than the values in Chicago. So the client was like, I'm only paying $90,000 for the house, two-story house, beautiful house. I said, yeah, but the replacement cost is $210,000. So she couldn't understand that at first, but when I explained to her, if you had that total loss, do you think I can rebuild that two-story house and your garage for $90,000? She said, I got you.
Okay.
So it's our job to properly insure, and I tell my clients, we're the educators in this. Trust me on this, okay? I don't want you to come back saying, I didn't get this, and I put in a claim, and that didn't happen right. So we're here to properly insure you.
And so with that client, did you tell her she had to make sure she had insurance of the $210,000
Yeah,
amount?
it was very low premium, so they think that it's so much higher premium. You know, when you're still under $100 a month and you got all this coverage, so we're looking out for you.
Wow.
We don't want to overinsure you and overbill you. The price is still very adequate for your closing. So we're not trying to get more from you. I'm trying to get something to you.
That's good. That's good. So how does credit play a role in insurance?
You know what? Years ago, credit was not a factor in determining the rate. In just the past, I'll say 9 or 10 years, credit became an important factor on determining your insurance rate. We were able to just insure people just like that, but because of the, you have people out there who use insurance for the wrong reasons to get money.
Yeah.
So if they have worse credit, it kind of affected their rate. And so that has caused the industry to secure a look at the credit. It doesn't hit the credit. It's just, it views the credit. So now credit is an important part of the rate. And again, it doesn't hit your credit. You still can have your home insurance and not have your credit hit, but it will be viewed.
Wow. So in what way does it affect the rate? Does it make it, let's say if there was a person who maybe has somebody watching who has a 680 credit score. And so maybe they're purchasing their first home. And so now they know they have to have homeowners insurance.
Right.
Would that rate or that particular credit score cause their rates to be higher? Or is there an amount or a specific number on the credit report that insurance agents are looking at or agencies are looking at?
Yeah, and it's the insurance industry, not the agent, looking at that, because we put it into a system. So we're not saying, your credit is not 700, so I'm going to raise your rate. It's nothing that we determine individually as agents. Okay, that's an insurance industry thing. But there's a median credit that they look at, and then there's a credit history in the past. How good have you been in paying your bills? You know what I'm saying? How many balances do you have, outstanding balances? But just as you purchase that home, that's the same thing that they look at, am I right?
Yeah.
To get that home. So all of that is just viewed.
Yeah.
And it will be, I will say, it will be much higher if you've had some pretty bad hits in the past with your credit. It will be, your rate will be, in some cases, like 1.5 times the average consumer.
Okay.
You know, so if the average person is paying $100, the higher credit may be $150.
Okay. You know what? There was a statistic that said that the Insurance Information Institute did a poll and found that 93% of homeowners had homeowners insurance. However, only 41% of renters had renters insurance.
Okay.
Why do you think that is?
Well, renters look at the fact that they don't own the property. Okay? And so they figure, I don't need insurance. But the point is, homeowners, they cannot close unless they have insurance. They will not be allowed to close a property unless they're purchasing cash. That's fine. They're purchasing with cash. They're on their own. They don't have to purchase insurance. But a mortgage company is going to require that the homeowner has insurance. So, therefore, the homeowner is not always doing it by choice. They're doing it by necessity. However, the renter is the person that says, I'm just renting an apartment. It's just me, you know, my little furniture. I don't need insurance. However, they should always consider the fact that should there be a fire? Should there be a loss? Let's say, for instance, you're at the mall. Someone breaks into your car and steals your laptop. That renter's insurance covers that laptop.
That's good
or
to
any
know.
any personal items that you would have on your, on your possession. I had a client that got robbed in the street and with a fur, and because they had renter's insurance, we were able to recoup that fur for that client. But they had to schedule it. So schedule means that you got your renter's insurance, which runs about $12 to $20 a month. Very inexpensive. And then they had to schedule that $5,000 fur, which is probably about $75 a year. It's not going to be automatically covered on your renter's items. Your renter's items include your furniture, clothing, and things like that. Appliances.
So talking about the basics of what are included within insurance. So if there's a homeowner who's watching and they're concerned about their coverage, what exactly does coverage cover?
For the homeowner?
Yes, for the homeowner.
Okay, the homeowner, we're talking about the entire house. And let's talk about the homeowner / condo. Okay, because that's two separate things there. The homeowner is covering the entire house, roof, home, basement, garage, everything, okay? Personal items, liability. That's all included in the homeowner's policy. And you know that it's requested or suggested that you get at least $300,000 liability. Our systems default to $300,000 liability. And people, why do I need that? You know, some companies only will give you $100,000 liability just to keep that liability low on their end.
Okay.
But it should be a minimum of $300,000. Well, why do I need that? Okay, let's talk about that porch party, that deck party that you had. Every summer we get together, have those little deck parties for the party, for the birthday parties and things like that, graduation parties. And you got 15 people on your deck. And all of a sudden the deck gives way. You got a lawsuit on your hand. And guess what? In most cases, because when I query my clients, I ask them, do you have a lot of get-togethers? Do you have a lot of gatherings, parties, and things? If they do, I'm going to give them $1 million liability. So now you got 15 people, 10 of which may be hurt. So if you get those people, their lawyer is coming after your home.
Yeah.
They're coming after your assets. And and $300,000, can you imagine $300,000 being enough for 10 people to sue?
No.
Probably not, right?
No.
So generally we push that they get that. And if it's a condo owner, the condo owner owns the drywall in.
Okay.
Not the bricks, not the roof.
Not the structure.
Not the structure.
Okay.
And so they only own from the drywall in, the floor, the cabinetry, the appliances, they own that. So they don't have to cover the building. So theirs is just a little bit more than a renter's policy.
Ms. Dukes, so does basic property insurance cover fire?
Yes.
What about a hailstorm if it damages a roof?
Yes, it does.
What about flood insurance?
Well, flood insurance is a little different.
Okay.
Generally, if you live in a flood zone, you'd have to have a separate policy for flood insurance, a separate policy, which is probably, in a lot of cases, equivalent to the premium of the home insurance.
Okay.
So in a flood zone, you have to have two separate policies.
Are there any other exclusions?
Well, you do have other policies that, well, the homeowners also includes sometimes a sewer backup. You ever have, a flood is when the water floods into the house, but the sewer backup is when the water comes out of the floor into the house.
Wow.
So it's two separate types of water damage.
Okay.
Okay, so people don't understand that a lot.
Okay.
And I say about 7 or 8 years ago, they had to kind of pull those policies out because people were over claiming on that quite a bit.
Okay.
Yeah, and you can usually add that policy to your homeowner's policy. We'll add that endorsement, we call it, to your policy for about $300 a year generally. But that's sewer backup.
Okay, and you know what, I'm sure there's probably a listener, I can honestly speak for my father. We've seen a couple things that have come in the mail that talks about like sewage and septic, like all these different backup things that happen.
Right.
Should we get that with our primary insurance carrier, or should we actually go with those different companies that are sending advertisements in the mail? Because I'm sure someone is out, they've received those.
Yeah, generally you may want to see if your company carries what they're talking about, because sometimes they offer extra things that the insurance company may not carry. But as long as it's something that your company carries, you don't want to try to get too many separate policies, because sometimes people have other motives behind, you know.
As to why they're trying to even get your business, right?
Right.
Especially seniors.
Exactly.
Okay.
Exactly.
Are there any benefits for veterans with insurance? Do they have discounts available to them?
Yeah, you know, a lot of times there are companies that specifically write for veterans. So the average insurance company doesn't really have like a whole lot of extra discounts. Even the agents don't really get many special discounts, but there are companies that will cover specific veterans out there.
Are there any other class of people like veterans that may have discounts that are available to them, but maybe they didn't even know?
Well, seniors. Yeah, you get a lot of seniors, and you get student discounts. You can have coverages on your home or actually your autos. That if your child is away at college, they get a huge discount on their autos. And I've heard this thing about bundling. Yeah.
Does bundling really provide that much of a discount?
Huge discount.
Really?
Huge discounts. A lot of people say, I just want a quote on my home. I don't want a quote on my car. I said, I hear what you're saying, but you don't know what you're saying. I said, a lot of times people think, I'm really not going to save. But a lot of times the money you save can be used towards getting that car insurance now. And it's in a lot of cases, it's about 60 to 70% of the premium of the auto you would pay elsewhere.
So with recent fires in California or even the volcano eruption in Hawaii, what's the likelihood of recovery for homeowners in those states?
Well, actually, it could take years for recovery because of the major devastation that has taken place. It hits the insurance industry so hard, though. It
Wow.
really does. And we hate to admit it a lot of times, but everyone is affected, even though we live in another state. When it hits the industry nationwide, everybody gets a little piece of that increase. And we have to take that increase to keep the insurance industry alive, because the insurance industry covers billions of dollars worth of coverage for people. So it affects everybody, but the likelihood of getting it taken care of, they do take very, very good care.
Do the homeowners have an option as to whether they want to just receive a buyout, meaning just receive their checks and pay off their mortgages?
Yeah, they do.
Or can they rebuild if they like to rebuild their home?
Right, they can rebuild, they take a look at their options. A lot of times if the homeowner is under a mortgage company, they have to kind of agree and go along with that. They can pay off the mortgage, or they can rebuild. They can do a lot of times they own it outright, so they can rebuild or go move away and do whatever with the check.
Okay, gotcha. Okay, and for the pet owner that's probably watching,
Okay.
are your pets automatically included in your homeowner's insurance?
Not automatically. There is a question that say, do you have any pets? And so we have to delineate what pets you have, if you have a pet. There are some pets that the insurance company will not insure your
Really?
home for. Yes, ma'am. The Kita, the Chow, the Pit Bull, they will not insure that home. However, there are companies that do what's called a higher risk insurance. So if you have that pet, we will insure that home with that pet. Because of like the vicious nature of the pit bull, if that pit bull kills the next door neighbor's child, you're on the hook for a really big claim.
Wow.
So they will not automatically insure you, no.
This is some really good information.
I'm serious, they will not automatically insure you. I've been through a
Okay.
lot in these 22 years.
But they'll insure any other type of animal or any other type of dog.
Well, yeah, but you have to disclose what kind of animal you have.
Yeah.
You know, if you have a poodle or a little shih tzu or whatever they call it, we will insure that with no problem.
Got it. Okay. Well, you know what? I think that this is a great opportunity for us to go ahead and switch over to auto.
Okay.
Okay. And so with the auto industry, why is it imperative that people have auto insurance?
Well, you got a lot of drivers out there now,
Okay.
and the society has just really increased with these drivers, and then youthful drivers and even senior drivers. So it's now, you know, remember years ago it wasn't mandatory. Now it's mandatory that you have auto insurance. I don't care what kind of car you got. If it could be a hoopty. But you have to have at least liability. If you're not interested in replacing your car, you have to have that liability. And when you know how inexpensive it can be, you should not be without it, okay? And you know, people try to take it casually, but you know now that if you're not driving with insurance, what do you get? The SR22. So the SR22 now puts you in a whole different category. Now you have to carry this SR22, which is a state responsibility insurance that you're saying, I promise to carry this insurance or else you're going to jail. So it's a package that you really need to be careful and carry. And it causes your insurance to go much higher, so go ahead and do it right the first time and get insured.
I'm so surprised because there was a statistic that I read that said that 14% of drivers that are currently out right now are uninsured.
Yeah, they try to get away with it. They really do. They get by a long time.
Okay.
But I talked to a lady at a visiting church I was at the other Sunday. She says, my son just got put in jail. I said, really? She said he was driving without insurance. Okay, he'd gotten away with it for a long time, but when they got him, they found other stuff. So I was like, oh, well, you know, so it just pays to go ahead and get that right. I mean, the cost is so menial when you look at what you're getting.
The risk.
Because it covers you it covers not the car, but it covers the person who's driving. And if you hurt another person, that liability takes over and pays that for you.
That's true. I get that. Yeah. And you know, there's another statistic that talked about that 77% of those drivers that currently are driving either only have comprehensive or liability only.
Yeah.
And I'm so surprised that most people don't carry full coverage.
Yeah. A lot of people are not concerned with replacing their car. They're just concerned with getting the minimum. So
Just getting basic insurance.
Basic insurance. So you cannot talk people into doing what they don't want to do.
Yeah.
They just a lot of times do what they have to do.
Okay.
And then a lot of times it's a financial situation for people.
Yeah, I could understand that.
So you have to kind of understand their situations.
So what's a good deductible for someone who has auto insurance?
The standard deductible is $500.
Okay.
Very few people will go with the $250 deductible, but it's not encouraged, because if you're not making a whole lot of claims, you don't need a low deductible. And if you're making, average claims, you come up with the first $500 and we'll repair the car and do whatever, take care of you and the person that maybe you hit or hit you or whatever.
Yeah, that makes sense. Well, what's one of the biggest secrets that maybe you can offer us about auto and home insurance?
Okay, we just talked about the bundling, right?
Yeah.
Okay. With the home and auto insurance, what the homeowner needs to know is we're covering the home, we're covering the car. And there's a coverage called an umbrella.
Okay.
The umbrella covers the home and the car and the personables for that insured
Okay.
for $1 million.
Up to $1 million in coverage.
Yes, starting at $1 million.
Starting.
Not up to $1 million, starting at $1 million.
Okay.
Yes. Now, what I mean by that, the home, we talked about that liability, right? The $300,000 or whatever. Some clients would do $500,000. Some clients want $1 million, depending on the size of their house. But that umbrella kicks in. Whereas, say for instance, you have the $300,000, but you had that incident on the porch.
Okay.
That umbrella kicks in up to $1 million per occurrence. So when you did say up to, that's what you meant by the up to $1 million per occurrence. But that $1 million is that per occurrence for each incident.
Okay.
Not
So
for the year.
let's do this. Let's slow it down for the viewer who may have missed that part initially in the conversation.
Okay.
So let's say we have a home. So with the home insurance, we have up to $300,000 in coverage. Let's say we have a car. With the car insurance, let's give this person
You have to have
comprehensive.
high limits on the car.
Okay, does it matter if you have full coverage or if you have a comprehensive or liability?
Yeah, you need to have full coverage.
Okay, so
Yeah.
let's say this person has full coverage on their car, and so that full coverage covers them up until what amount? What's a good amount?
With an umbrella, they require you to have the top limits. And years ago, it was a 100/300, which means 100 per occurrence, 300 in the aggregate, which means in the year.
Okay,
Okay, in other words, you can have up to 3
different occurrences,
yes.
gotcha.
But with the umbrella now, you have to have $250,000 on the car, which is another $6-7 a month.
Okay.
People think it's a lot of money. It's really not. You need to talk with your agent and say, I need to be fully covered. I want to make sure that I have everything that I need for my family.
Got
so
it.
you have mom and dad's car. You have a youngster's car. You need that coverage. And guess what? These umbrellas, they cost are you ready? 60 cents a day.
Really?
Not even $20 a month.
Okay.
You know what I'm saying? In most cases. If you have 4 or 5 cars in the household, you may be at 30, but it just really, people don't understand the cost of insurance is not where people think it is. But that secret is having that car and home. You can get that umbrella to do that extra coverage. And it's just like an
Yeah.
umbrella protecting that home.
Got it. So instead of the 300, if you didn't catch it, instead of having $300,000 worth of coverage for home and maybe $300,000 for auto, what you can do is an umbrella, and immediately you have $1 million in coverage.
Along with
Per
that
occurrence,
300.
along with the 300 per
Yes.
occurrence. Okay, that's good to know.
Yes.
I think that's an excellent secret.
I
Matter of
love
fact,
it.
I think I might need to look into
I
that before
love
by
it.
the time we
I
leave this
love it.
segment.
And you can get it with homeowners and condo.
Okay.
They said that they were going to start with renters, but you really don't own a whole lot with the renters. So it's homeowners and the condo insurance.
Okay, so what about bodily injury?
That's like when you're in an accident that takes care of the medical. Now, there's a medical item on the insurance. When it says 1,000, 5,000, 10,000, that's per person in an incident. So if you have an accident and 3 people get hurt, they're going to take care of that particular amount per person in that accident.
Okay, that's good. That's good to know. And so, are there any major things that you would like for a viewer to know about auto insurance or even homeowners insurance that we may not have brought up?
Okay.
You know what? I'm actually thinking, because you know what, we just ended the real estate series. So we have those who are not just a first-time home buyer or maybe a home, meaning it's their own personal property.
Right.
What about those who have buildings, meaning there's 3 units, there's 4 units, there's 6-unit buildings? What about coverage for them? Does it apply the same as homeowners insurance, or is there additional things that they need to think about?
No, it doesn't apply the same way.
Okay.
With commercial, it's called commercial property.
Okay.
Even though it's residential, it's a commercial building because you have tenants, okay? In the commercial properties now, they require that you have fire extinguishers on each floor. They require now that you have lit exit signs. Your average newer building will have all of this, but we have clients we've had to go back and say, our underwriter wants this, wants that. I had a client who had a porch that the wood, what you call the wood, you know, the wood was too far from each other. So a child could put their head through there and fall off that 3rd floor.
Okay.
So they had to get netting, the wire netting.
For the porch.
For the porch, for the back porch. They had to get that. Everything has to be safe. When we insure a property, we have to take pictures, front, back, whatever, and that property has to be what we call insurable.
Understood. Yeah.
It has to be insurable. So if we see any risks, if we foresee any potential risks, we're going to say, you need to address that, you need to address that, and then we'll come back and insure it.
Can a landlord require that his tenants have renters insurance in order to maybe reduce his cost of insurance?
I'm glad you mentioned that. It doesn't reduce the landlord's cost,
Okay.
but it does reduce the probability of getting those lawsuits.
Okay.
Within those individual units. Your larger commercial properties do have the stipulation that each renter has to have their own insurance.
Okay.
And a lot of times they'll have maybe a little insurance rep on site to grab you a little $10, $12 a month policy, but it's just good to have.
And then another thing I just thought about, for those people who have homeowners insurance, or even as a landlord, you may have your building insurance, commercial insurance, as you've told us that's the proper name for it. I've heard there have been many instances where people may have put in a claim and their insurance company will just drop them. Why does that happen?
You have some companies out there with one claim, you're dropped. I'm not going to call names, but you have companies that do that because they consider you a higher risk. You know, but you can't help if you had a fire.
Exactly.
And I don't agree with that. Thank God our company doesn't do that. But you can't help if you had a fire. You can't help if you had a major loss. However, there are situations where people make what's called frivolous claims.
Okay. Can you talk a bit about those?
Yes, let me talk about that. A couple of shingles fell off of my roof. I want to call the insurance company to see. I said, I'm so glad you called me first. I'm so glad you didn't call the claims department, because if you dial that 800 number, it is considered a claim whether we take it or deny it.
Wow.
So always talk to your agent first and make sure that this is a good claim. We also advise that you get a maintenance person. I tell the people, this is the way I make them look at it. I like to make people visualize stuff because a lot of times just telling them doesn't help. You have to make them see it.
Yeah.
I said, if you I'm trying to think what I was. If a bumper fell off of your car, or you have a flat tire, flat tire is emergency road service. But if something happens to your car, you don't call the insurance company right away. You call the maintenance guy. Your muffler went out. That's what I meant to say. Your muffler went out. You call the maintenance guy. You don't call the insurance company. Okay?
Okay.
So you have a little small things that need to be repaired. And the other thing, the company comes out and they'll assess that claim. But if they see the wear and tear has been horrible, they will deny that claim because they said you're not caring about the property.
Okay, that's good to know. So for our viewers who may be interested in actually getting in contact with you, or maybe have more information, more questions that they'd like to ask you, what's your contact information? How can they reach you?
Okay, I'm at 708-383-1400. I'm licensed in 5 states, so once you call that number, you'll be able to access. And then for those who like an 800 number, it's 855-531-5550.
All righty.
Yes.
Ms. Dukes, thank you so much for coming on our segment today to talk about home and auto. I'm sure the information that you've given today is truly helping someone right now.
Yes,
I know I'm
so.
definitely going to take advantage of this bundling deal.
Yeah, it's great.
And
for
the
you.
umbrella.
Yeah,
That's
the
what
umbrella.
it is.
You'll
All
love
right.
it. You will love it.
Thank you. Thank you
all
for coming.
having me. Thank you.
Thank you for tuning into our podcast. We want to hear from you. Submit your questions in advance to moneymondays@jbs.edu. Again, that's moneymondays@jbs.edu. For those of you who would like more information about Money Mondays or the Wealth Creation Center of the Joseph Business School, please visit our website at www.jbs.edu. Don't forget to join us every first and third Monday of the month at noon for a new money topic in money management, financial planning, and wealth creation. Be sure to hit that subscribe button if you haven't done so already. And as always, I'm your host, Jill Thompson, and I look forward to seeing you prosper.